What's up everybody, Tom here with another video. Apple sales missed for the first time since 2018. What does this mean for the market? We'll be answering that and more. We've got Facebook name changes, we've got market volatility, we've got cryptocurrencies going wild both ways. There's a lot to cover in today's video. I think it's going to be a good one. Stay tuned, guys. All right, well, here begins our market recap for the markets closed 28th of October 2021. And I'll tell you what, it just doesn't get any weirder than this. Facebook now becomes Meta. That's right, they've changed their name. What do you think about that in the comments down below? Do you like their name change? Do you like their new logo? Do you think it makes sense? Let us know. This is seen as an attempt at a distraction. I totally agree with that. I think it's weird. It's overall maybe something the company needed to do, but what timing, hey, when they're doing it. We did see Apple's result miss for the first time. That has caused Apple to jump straight back into a key support that we've been talking about all week. And it just shows that sometimes it waits or pays to wait for a release if you are expecting bullishness. Because while the supply chain issues are well known, the market goes in with optimistic intentions, and we'll take a look at that soon. Amazon also missed, gave a bit of crappy guidance in terms of supply issues mounting and labor problems, of course, coming through. And realistically, I think we're looking at a market here that is pretty much showing exactly what the problems are. It's being fairly truthful. We do have supply issues. We know that these are mounting, but we also know that Amazon has a strong technical and seasonal approach to November. So now that the earnings are out of the way, will we start to see the technical analysis take over? We'll find out more very soon. If we have a look at the session in review, Apple was actually up 2.5% before diving over 4 and a bit after the earnings result. And we had Tesla coming out with 3.77. This stock just can't be stopped right now, guys. Congrats to people that are holding that. We also have Cat, John Deere coming out with some okay notices there. Cat moving up 4% off the earnings. That's not too bad. And the rest of the FANG stocks were a bit subdued. But interestingly, Apple and Amazon both coming in strong to the close, then failing us in the actual earnings result. Let's take a look at the indices. IWM, the small cap Russell 2000, that was up 1.99%. We had Nasdaq up 1.15, though that's changed after hours. S&P 500 0.98 and Dow Jones 0.68. Kind of opens high, rallies around the day, and then interestingly, Wall Street bought every single one of the markets into the close, but maybe that was a bit of a bad choice, or maybe it was a bit of a joke because it wasn't as strong after the hours. We'll see soon. IBB, the biotech sector, 1.68%. That's had a great sector closure on it this week in terms of bullishness, and I think that's going to continue to be a story here over the next month. We'll watch IBB very closely. XLRE, the real estate sector, 1.47, and the old poor communications, really hated at the moment. XLC 0.33 up, but one of those sectors that might be a sleeper. If you go and have a look at it, XLC has not been doing well for a while, and it might have a turnaround soon. We'll start to watch it on the technical basis. Let's talk about Q3 earnings. This is taken from streetinsider.com, not affiliated with them, but that's where I get these earnings beat data reports. And we've got 76% beats, still 561 versus 173 misses. So as long as this stays above 70%, that's really a pretty good earnings. When you have 70% plus beats, that's pretty strong. And we've just had the biggest earnings that you can get this week. So I think from a fundamental perspective, the market's looking okay in terms of what the expectations are and what Wall Street wants next. We've just had Apple, Amazon, of course, Shopify, MasterCard, Caterpillar, and others. Exxon comes on Friday. And as we mentioned, this ends the super week of earnings, but it's not all over yet. There's still plenty of stocks coming through over the next couple of weeks in the seasonality as well. And this brings us on to discuss seasonality. During earnings, what tends to happen? Optimism. What happens straight after earnings? Bit of pessimism. Then we get ramp after that. So this is seasonal. This is actually what is expected. And we'll take a look here at some of the similarities between most of the years and what we're seeing at the moment. Here is the pullback that you usually expect, that September, August pullback. Then we get the ramp. Then we get a small dip coming into the back of October. Maybe that last 2 days is all we get. Then we get another ramp, pull back to the highs, and of course, further ramping into the end of the year. This is pretty much what we're going with into the close of the year, into the Christmas rush, into the Thanksgiving kind of runs. Remember, there are technically some very strong seasonals that happen around there. The Santa rally and the Thanksgiving rally, that week of Thanksgiving, tend to be very strong in the markets, and we'll talk about that in the coming weeks. So please subscribe if you're enjoying and bringing together seasonals, statistics, technical analysis, and a bit of fundamentals all together. That's one of the best ways I think it is to trade and invest in the markets. Let's get into the TA here. We start with the VIX. Volatility was low. It sit at 15 into a week of high, big news data. We did see a spike of volatility. The market is still basically ground out new all-time highs and new highs in general, but there was a little bit of a spike. Whenever you're trading the VIX, you've got to remember you've got to be short, sharp, and fast. You can't really hold on to this thing. If you ever look at an inverse ETF or an ETF of the VIX in general, you'll notice that the degrading of time is horrible on these particular ones. So the roll costs can be big, but the VIX above 15, best case scenario, probably like a 20 at the moment. And you just got to remember, even with a dip, it'll be mostly short-lived with VIX traders. And if you're trading it, that's how you've got to look at it. Let's move over to Apple, the big stock here. Post-market, 147, was down as low as 145 at one stage there. 150 though, a key resistance, broken and closed before the earnings. Maybe the market was getting a little bit hyped and a little bit optimistic before those earnings. Possibly it was a trap because Wall Street know that retail love Apple. So Apple was allowed to get through our big 150 resistance today, closed. Now it's sitting around 147 pre-market in terms of post and pre. This will be a very key zone, 20 and 50 exponential moving average right around here. We've got it highlighted as a zone of interest for dip buyers and people are looking at it for interesting reasons. If we see the next session open around here, you're looking for lightning bolts, little double bottom bases, 5-minute, 15-minute chart. If you like to be an Apple, it's a good level. And the next level remains around that 140, 141 zone down here. And then, of course, we've got our longer term trend line. So Apple disappoints, but probably not for long when it comes to the stock market and how people like to pick up these positions. Already it's recovered almost $1.50 from its lows. Amazon, let's take a look at that. Another one that was in. Now, this made more sense. It was actually at a resistance come the close. Then the result came out and it sold straight down to the previous resistance support area. What a surprise. It goes from a resistance to a support. These are the exact levels, and this is what makes technical analysis so awesome, because you can kind of find those key zones of interest, look at those, and then of course make more informed decisions off those areas. So talking about Amazon moving forward, now that we've got the worst out of the way, we knew that there might be some supply chain issues. Maybe people are going to perceive that the market won't be looking to buy stuff, or people won't be looking to buy as much crap coming into the Christmas period. Let's see what the technicals end up doing. Remember, November, seasonally amazing month for Amazon. Should we break through that 3,500, 34, kind of 68, 70 area? Do we see the ramp up to what many analysts expect is a 3,800 to 4,000 price tag on Amazon at these prices? This will be the story that I think is interesting over the next month. And we'll continue to watch these technical breakouts because opportunity is certainly there. What do you guys think about Amazon? Do you reckon it's going to be at 3,900 come the end of the year? Is this your expectation for it to break through this downward trend line, get above the resistances and start ramping in what we call the participation phase? Interested to hear your thoughts. Move over to Tesla. Now, if you put this on a weekly, you look at it and you go, what a beast. And we have been very bullish here on the channel now for a couple of months on Tesla. It's paying off. Fantastic price action. You cannot deny the price action in these types of stocks. And we know that when Tesla breaks out, you can't really start to short it or really think about that. You've got to be careful, guys. A lot of people messaging me over the last 24, 48 hours. Tom, I'm trying to short it. I'm going to short it. I'm shorting Tesla. These types of comments are coming up a lot. How can you short something that still looks quite bullish? Now, people are citing the dailies and saying these look like nasty looking candles. They are just candles by themselves. They have no follow through. Is there a new low the next day? No. Is there a new low the next day? No. It just keeps gapping up. So until we see some actual signs of weakness, you've got to continue to be mostly a bull on it. Now, is it easy to buy the dip or find a dip here? Not at this stage. I was looking for some kind of level that people could be maybe looking at from a technical perspective, and the only one I've found so far is maybe the 2-hour 20 moving average being a level of interest for day traders, purely because it's bounced off that zone 3 times since the ramping. It's not much to go off, but it's probably much the best we can go with unless you're on the 5-minute, 15-minute timeframes. And if you're already in it, well, I guess you're looking at your scaling concepts, looking at the 1100, how it interacts with that in the future, the 1200, and every $100 increment afterwards. Amazing stuff there. Move over to the US 100. Now, this is where things, and we're going to actually use the futures here, this is where things get weird. So the actual market closed at an all-time high. So the Nasdaq closed at all-time high, we'll see soon, the QQQ. However, the rejection, and now further little bit of weird rejection came through after the market due to the earnings not being up to scratch for Apple and Amazon. Will this create further selling pressure? I think for a bear to get involved in this market, you've got to be very careful. Is it at the resistance high? Sure. But the main market actually closed above. Is there any follow through? Not at this stage. So maybe this 15,530 becomes the zone that you should be really paying attention to in the day trading world. And the reason why that is because we've bounced off it a few times. We've found some resistance off it before around that area. And this will be a zone where I think algorithms will get back involved in the short should it happen. Will the short be long-lived? I don't believe so, based on the beat data that we're seeing and hopefully the Evergrande situation in China sorting its way out. When they tell you something like, hey, we want the old CEO, we want him to start paying out of his own money, what are they doing? They're punishing him for doing bad stuff. So they're basically saying, we're going to potentially bail out, this is my opinion only, we're going to bail out this company, we're going to sort it out, but all CEOs, you listen up. We will crush your wealth in terms of making you do it. That's my opinion. Maybe some people don't agree with me, but that's the way I'll look at it. US 100, underneath this zone, algorithms may come in. Otherwise, you've got to look at it as still as bullish. We look at that Seasonality data. Things are still looking very, very strong here. And while I do expect at some point we get that tip over where the market comes back down, fills some gaps and moves back up, it's very hard to pick exactly where that is based on the current price action because it just keeps being strong. Let's look at the QQQ. Here it is. Look at this. By all normal TA, you would think, wow, that's a big breakout. That's nice. It's broken past those resistances. We never got any follow through onwards and upwards to our top end trend line. That could be exactly how it plays out. So if you're still bullish, there's nothing wrong with being bullish at this stage. If you're waiting, then you're really just trying to find your specific positions because there's still a lot of opportunity in certain stocks, or you're waiting for it to come back to that 20 moving average in the future, which is most likely going to be that buy zone or that area where people find buying pressure support. Nasdaq, same thing. Of course, new all-time highs, same as the QQQ. We've got our top end channel here, which has been very good. We've got our bottom end, and we're looking at those 15,200, might even be 15,300 by the time this thing comes down now, because the 20 moving average will be the first area that people look at. Let's move over to the SPX, and the SPX held a lot better due to being 500 companies and Apple not smashing it around as much. We close here at a 4596, close to the 4600 magical land level. And 20 moving average still quite far away from current price. We're talking about, let's talk about it, about 2.32%. We've got that 4,500 area around there. If a dip did occur, do we expect buyers from Wall Street to come in at retail? Yes. Is this still looking quite bullish? Absolutely. Are we going into a potential profit taking scenario on Friday? That could be the scenario based on the Apple stuff. But strength to strength to strength for now. Again, the Seasonality data pushes us to think that how could we be bearish on a market that still looks incredibly bullish from a TA perspective? You're really just hoping at this point that you get those pullbacks to the 20, which inevitably will happen. But the problem is hope and the reality can be different. We had to turn to being bullish when we got the lightning bolts down the bottom down here. So when we got that movement out, what can you do? You have to turn to being bullish. So far, that's been a good choice. I expect it to continue to be a relevantly good choice into the end of the year. Now, here's where things get weird, and it's the crypto market. Let's put this into a 2-hour chart. What was going on today? Okay, let's talk about this, guys. So firstly, we have a downtrend. You can see the downtrend, you can see the highs. We're right there right now. So before everyone goes, oh, wow, this looks super bullish, that was a false break to the downside. I mean, it could be, but yeah, that's where we're at right at this stage. Let's talk about this though. What a nasty piece of work this crypto market is. It comes down. I'm sure people would have had some little potential pending shorts underneath here. They get clipped, effectively a stop hunt and a half, and then it instantly reverses and goes up. Look at this. So nasty. Underneath 58, gets under there by a couple $100, and then runs all the way back up. So that's pretty nasty stuff. We do see some congestion around here, which proves that this downward trend line is being watched by a lot of traders. And we now look for, of course, a breakout close above here to signify further strength in the Bitcoin market. Now, I talked yesterday's video and the previous couple of days about this idea that the pullback might be the same depth as the previous one. So if we take the same depth, here's the depth again. And this is what we call an ABC style movement, or just really a leg style movement. We have the first leg, we have the second leg, and then we get that third leg that pushes us into some serious levels, 78. And I am bullish into the close of the year here on Bitcoin. I think that a lot of things are pointing towards the seasonality concepts of 17, a lot of positivity coming out, a lot of side deals in the crypto market. People are waking up. We've got the BITO, we've got ETFs everywhere. I've got people that I've been speaking to that are seriously considering it over gold, which is already a thing that's been moving for a long time. And they're kind of more old school the way they think. So what a fascinating time in the crypto market. If it does pull back to this 50 exponential moving average, 54K area on the daily, that would be fantastic. It would just pretty much prove that the concept's well in play. If it doesn't, oh well, you know, really Bitcoin is still relatively long. And I think the interest here is actually also in Ethereum, because Ethereum has closed the weekly above that 4,000, and then it's found a lot more strength than the other markets. So this makes sense to, what do we know it as? The alt market's getting started. This is the first one. This is, everything rises with Bitcoin, but as that Bitcoin stalls or falters a little bit, often we see the rise of Ethereum and it really starts getting into its own. It's about to make some all-time highs here potentially based on this current reversal. And if it does, then what's set up next? We've got the ADAs of the world, the Cardanos, that's not doing so well. We've got potential ramps still in Polkadot, Link, all these other cryptocurrencies still doing so well. And that's going to be super interesting. We also have the dead cat bounce coming through from SHIB. So if we take a look at SHIB, and I'm not a huge fan of this coin, you know, I find it pretty dangerous for people, and I think people should practice risk management here. But this is a classic dead cat bounce. We see that huge sell-off, followed by huge ramp, followed by retest of the lows. And I still wouldn't be even surprised if we get a new low after this. This fib, if we take it, is absolutely dead cat bounce style. If you ever see these, this is exactly what you expect. Huge sell-off, ramp up to the 78.6 fib, a perfect dead cat bounce level, and then it pushes straight back down to the lows. That's a classic one. It happens all the time in the crypto market, and it's well worth watching on the charts. Just a quick reminder, going into the weekend, daylight savings time shifts for CHF, Euro, Pound, and more. So of course, if you're in those countries, please be aware. We have the Treasury Currency Report tentative coming out, and we've also got the core PCI price index. So we're in earnings week. We've just seen some of the biggest ones come out. Next week, we still have more to talk about there, which is going to be exciting. But I'm glad that this is over and we can start to move into the more technical aspects of the market. Once you get the FANG or most of the FANG out of the way, then you can move towards saying, okay, let's make some better moves. Let's trade a bit more technically. And I'm sure glad that we're at that point. Thanks so much for watching. If you enjoyed the video, please remember to subscribe, smash that like button, guys. And I want to say, have a great weekend, everybody. Have a great Friday session as well. And I hope you've done okay this week and some of your stocks have reported well and everything's been smooth sailing. Bye for now.